Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris rapeseed, Winnipeg canola and Malaysian palm oil markets. I'll start with Paris rapeseed. I've spoken at great length in recent weeks about the recent ascending triangle pattern from March to mid-August and a bull channel from April and their respective targets X, X1 and X2 that you can see on the daily chart. Well, the time for discussing these has now gone. They will be retired after this broadcast. It's time to talk about the future. The more recent key feature has been the break upwards 5 weeks ago, which initially looked like an ascending broadening wedge pattern, but which deviated 2 weeks ago out and below the lower trend line, currently at 717.5. I detailed 2 weeks ago what you could expect in the event of a break lower, and I quote, a break upwards would be about €56 on top of the value of the upper trend line when it is broken. A break downwards would be about €65 off of the value of the lower trend line when it was broken. The only two other things to add is firstly, don't force the break. If it stays within the pattern, then let it stay there. And beware of false breaks. End of quote. Hence, with this break lower, we could see a move down to the 587.5 area. However, as we've subsequently seen, this market has made a false break lower. Additionally, in this false break lower, it left the door open to look at the action over most of October and especially since mid-September to date as a possible bullish halfway hesitation. This is a big if. But if that turns out to be the case, then we could see an upside target for such a move in the 730 area. Now, it's still too early to be certain of that, and I'll tell you why. I've taken the opportunity to draw a mid-September to mid-October bullish shift pitchfork. It is, I have to say, a nascent one, but so far the market has run along the underside of the middle tine, currently 694.25, until this week. You see, though we've made a new high this week with an unusual sort of key reversal up, the same day was also an indecisive spinning top. Then yesterday we had a weaker indecisive doji cross. So you can see this market has, over the last 2 days, has started to have doubts up here at the top of the market. Today we've seen a move down towards the lower tine, currently at 668 even, where it has held. But with not that much support below that, apart from the area between 630 to 674.5 that makes up the proposed bullish halfway hesitation. Maybe that will be enough, so watch out just in case, and maybe prepare just in case for the market rising up to the 730 area, or for whatever the next pattern may turn out to be. Winnipeg canola. There are, as I've previously said here on many occasions, 2 patterns in operation here, both having run to fruition, and both seemingly not as yet showing a sign of which would be the more dominant. We have a descending triangle from early July, and a sideways triangle, also from July. The upper trend line for both is the same, the May to date downtrend, currently at 849.80. The market broke higher over this 4 weeks ago. Now for the descending triangle, we have a base on the congestion between 819 even and 819.40. I have to add a caveat here. Since I first started to look at this as an idea, I had been underwhelmed. I'm not happy about this pattern. I would rather call it a smaller descending triangle from mid-August using the same downtrend for ease of use and a base on the 840 area. Anyway, the second pattern, the sideways triangle, has, or should I say had, an uptrend breached 5 and 7 weeks ago, currently at 918.70. This breach was an odd one. You see, prices initially continued more or less sideways, then started moving up along higher, up along the same uptrend. Indeed, until this week, we've never been separated from it. Anyway, 4 weeks ago, I gave some levels on the upside. These have either been proved valid or are still valid. Thus, to recap these, for the new smaller descending triangle, we had an initial topside target X2 in the 930.80 area and a secondary target X3 in the 946.5 area. For the ragged sideways triangle, we had an initial potential target X4 in the 968 level and a secondary target, still valid, target X5, at the high of the market in the 10.08 area. To be honest, I wasn't in love with any of the three patterns I'd indicated, but out of the three I did favour the smaller descending triangle, an upside target in the 9.30 area. Anyway, targets X2, X3 and X4 have all been fulfilled, with target X4 in the 9.68 area finally reached yesterday. We now have only target X5 in the 10.08 area still left unfulfilled, though the sharper ascent we've seen in the past 2 weeks indicates that perhaps that may soon be in the frame. As for the downside, well, just keep a lookout for the extension of that uptrend previously mentioned. It's currently, as I say, 9.1870. That seems to be the key to this move on the upside. Bursa Malaysia crude palm oil. First off, please continue to try and ignore the colour changes on the labels in the daily chart. There's no special significance to them, it's just my charting system playing silly buggers once again. Anyway, 5 weeks ago we had a gapping move down through the following. The short medium moving average currently 46.63. The medium moving average currently 43.59. And finally, the market stopped short of testing down to the congestion supports between 40.10 and 39.53. These supports had previously been bolstered by the rising long moving average currently at 41.65. This halt and reversal back up, with a gap, set the stage for the start of another move, a move I had intimated weeks beforehand. You see, the move up from the low to the high back 5 weeks ago gave us a weekly key reversal up that very week. Additionally, the follow-on higher 3 weeks ago, especially the gapping moves higher, gave us a rare monthly key reversal up here in September. And that's as well. So why are these so anticipated important in my eyes, other than as their own standout patterns? Well, it is because a little while ago I laid out a scenario for a potentially very, very large bullish pattern. It was to look at the whole of the May to date action, including the sideways weeks over August and September, as an extended V bottom. Now, this pattern is not that common, but it does have some heavy merit here at this time, and by heavy I mean really heavy merit. So, to give you an idea of the potential for the move higher, let's look to the action since the low of July up to the high in August as the size of the potential move that may happen. Thus, it could be quite large, and it could also be a further simple bull flag stroke bullish halfway hesitation pattern at the same time. However, if it turns out to be the larger extended V pattern, then it will not only have the backing of the June to date action, but of all the action since May. That is quite a lot, quite a lot. An initial idea on it just being a large bull flag stroke bullish halfway hesitation, well, that gives a potential target X in the 53.75 area. Originally that was way above the current top of the market and a very, very big ask. There is an even bigger secondary target for this pattern up in the 55.25 area, but I'm not even going to go into that too much until we see prices approaching target X. This was all before last week's action when we saw a peak at 53.26 within spitting distance of target X. Okay, so that has been the scenario we've been working under. Now, 3 final points. 2 of them I've already mentioned before, and 1 is a new thing. The first is that the bullish Andrews picture for the 2021 action, especially the middle time, currently at 49.70, has been, and still is, the main bullish incentive here. My drawing of this bullish Andrews pitchfork so many months ago had been a bit of speculation on my part at the time, but is still maintaining its validity and prominent bullishness. The second is the very recent mid-September to date bull channel, currently 53.05 to 57.39. This seemed to have some merit, but late last week the market gapped out of it on the downside. And though early this week we've seen prices try and re-enter the bull channel, they've been unsuccessful. However, there is an option for the market here. It could be widening and creating, or as I prefer, morphing into an ascending broadening wedge pattern. This is by no means a done deal, but it does seem an option for the market's actions in recent times. Finally, the simplest and perhaps the most bearish of all the ideas. It is to look at the last 3 weeks and this week as a potential topping action. Again, it's still too early on this, but you should not be immune to the idea. I will comment more on this one as I see things happen. I think I'll leave it at that for now. I can only say what I said this time last week again. I'm hoping next week things will become more clearer. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.